Welcome back to Market on Close. It's time for Options Corner, so we will bring in Kevin Green, our senior markets correspondent here on Schwab Network. Kevin, always great to have you. What levels are you keeping an eye on as we head into the close?
Yeah, well, Marley, obviously we're having a really good day here. And actually, I'm looking at the 6,600 level. Potentially, we could melt up to that particular area, only about 10 points away at this point in time. You have 10 out of the 11 sectors in the green. The only one that is lagging right now is energy, which is not a very big impact when it comes to the market just as a whole. We can see that we've broken out of this flag pattern that has taken shape here. Was looking at 65.75 early on this morning, but we have now been able to break out and continuing to potentially melt up after this flag pattern. So 65.90 technically is the area of resistance. You have around 183,000 contracts traded for the day if you're looking at the calls right now. That could actually hit 200,000, which I don't think I've ever seen those many contracts being traded for 0 DTE options for today. But that will be a considerable wall. But just given the momentum that we've seen just overall, it's not outside of the realm of possibility that we could actually hit that 6,600 level. Any type of failure to the downside, you'd like to hold 65.70. It's just days like today when you have a lot of this enthusiasm, you can have a little bit of unraveling of that trade going into the close as people cover for profits, as well as covering overnight risk and potential risk tomorrow morning. So overall, really good day. Not seeing anything out of the norm when it comes to potential risks post the CPI report as well as the PPI report.
Are we running any risk? I know we sometimes talk about a potential squeeze as we come into the close. Are we running any risk to see that today?
Yeah, I mean, I think we can see a squeeze. I think we're seeing a squeeze right now going into the close. And so if you kind of look at the components of the S&P 500, especially the Mag 7, they're doing a phenomenal job today. You are seeing semiconductors kind of lag a little bit. And then Oracle has been drawn down as well, a significant amount of give back when you're looking at that nice run yesterday. Those are really the laggards. Now, if you actually catch a bid within that Oracle trade going into the close, that probably will be enough in order for us to hit that 6,600 level. I'm not sure if we're going to pin there, but that is enough for us to be able to try to make it there as well. And then you have some pretty considerable breakouts taking place. Tesla is one of those stocks that has been kind of range bound, but over the last couple of days, you have seen aggressive options buying activity that's really been pushing that stock higher. And then healthcare, which has been a smaller component over the last, let's say, year and a half, is also catching a meaningful bid as well and breaking out. So it's not only just technology. You have a lot of other sectors, a lot of other businesses that have been kind of lagging, really starting to lead the way here, which once again can kind of fuel us. And we're only about 10 points away. We're trading at highs right now.
And what about volatility on the day? Is it up at all?
No, volatility is down. I mean, we're sitting at 14.74 for the VIX. You're implying around a 0.85% to 0.9% move to the upside or downside at this point, and it's crushed pretty significantly. Now, could it go a little bit lower? That could be the case, but especially on this trajectory, you could look at even maybe the high 13s. I would think, once again, right around these levels, volatility gets a little bit too cheap. But what's different about this time around, where we have a 14 handle on the VIX, and what we've seen in the past, especially for this year, is that the market continues to grind higher and really kind of outpacing what's being implied in the market, especially on the upside here. So that's really good if you're able to continue to see this melting up type of scenario while volatility is fairly cheap. At some point, we will get to a level where we have very cheap volatility, but we also have very range-bound markets in the S&P or even the NASDAQ, and that's not really a healthy environment for scalpers or intraday traders or even swing traders for that matter.
And are you seeing any indications in the charts of where or when that might be?
If you're looking at the charts, I would say 6,660 seems like a key area of resistance, just going off of a longer term trend that's been in place for about the last 10 years or so, 12 years or so. And that has been a really key indicator. If you're looking at the daily chart, we're still in the middle of this range or this channel. So that means that we still have some room to the upside as we kind of get to or potentially hit that 6,600 level. But you have MACD in a bullish formation, which is good. RSI now getting close to overbought territory, which is actually really good. That shows health. You have pretty decent volume for the most part, breadth expanding, holding the 20-day, holding the 50-day. All the things, all the ingredients that you need for a continued move to the upside is still intact.
And anything else you're keeping an eye on, Kevin?
Those would be kind of the areas. I mean, going into the close, if we're looking at the advanced minus declining stocks for the NYSE and the S&P 500, I mean, this really tells you the whole tale for today. What happened when we opened up? Not only did we see the S&P 500 move higher, but we started seeing all of these stocks in every single sector almost moving higher as well. The S&P 500, the equal weight S&P 500 is also in the green here today. This is exactly what you want to see, and this is what makes it very difficult to knock this market down going into the close, because you have more support, if you will, or when it comes to participation. So a really healthy day overall. You'd love to see more days like this in the coming weeks and months.
Well, Kevin, we appreciate you taking the time to break that all down with us, and you'll be back with us again after the market closes to cover earnings. But thanks for Options Quarter. That was Kevin Green.